What is up, guys? Dirk here. It is Saturday. It is the 10th of June. I do have a bit of a cold, so excuse me if the audio sounds a bit messed up. But I wanted to bring you this update because there's a lot going on in crypto. We have the SEC who sued Binance, who sued Coinbase. There's a lot of messy stuff going on. But ultimately, I still think the charts lead the way. So I'm going to share with you my opinion on the charts and what is happening in the crypto space right now. Okay, so the next thing I want to bring to your attention here is that the Bitcoin halving is set to take place in about April of 2024, approximately 300 days away. So that's about 10 months from now. So the important thing to keep in mind is if we go and look at the chart, and this is going all the way back to 2011, the red lines here are the halvings, right? We have had 3 halvings to date, and the 4th one is coming up in around about April of next year. Now you can see the price action of Bitcoin. This is a log chart, so it does look nicer here that we can see, and we can compare the price action. But you can see in approximately the first year before the actual halving date, that is when it is still an optimal time to actually dollar cost average. We get a rally leading up the first few months into the halving, and then an explosion and a parabolic move up. We have seen this 3 times, okay? And obviously that's a small sample size. We can't assume that this is going to happen another time or continue indefinitely, but maybe it does, and so far it has. So until proven wrong, we can potentially go by the assumption that there is a decent chance of this repeating once again. So you can see over here in the first year or so before the halving date, we have this price action that's a bit choppy, but it is still the best time to accumulate. If you bought before the halving and held until about 10 to 18 months past the halving, you would have made pretty insane gains the last 3 cycles. As you can see, you bought in the red, kept it towards 10 months in, and huge gains, huge gains, huge gains. So we are officially at a point where we are within the 12 months leading up to this halving cycle. Now, of course, could the price go down more? Yes, it could. I mean, we saw it here last cycle in 2019, where it went from 13,000. It still dropped back to just about 4,000, but then it started running up just before the halving and then went on a massive run. So look, we're at approximately 25,000 now and some change for Bitcoin. Could it still drop to 15 or 10,000, maybe on some sort of flash crash or whatever is going on in the space? Sure, that could still happen. But again, based on what has happened the past times, that would still be an incredible opportunity, in my opinion, to dollar cost average, right? Obviously, with risk capital, there's never any guarantees. But assuming this repeats one more time, now, until the halving is the best time to dollar cost averaging and accumulate. And then in theory, we should start to see the price run up a couple months before the halving and then continue higher past it, okay? We will know, within a year or 18 months if that is going to end up playing out. But so far, that is the pattern. The risk reward, in my opinion, is very good. The downside is limited to what you put in, and the upside is potentially 10x, 20x, 30x, 50x, right? Obviously not with Bitcoin, specifically 50x, but altcoins and the potential to make that is there. So if you have risk capital and you put that in, you know what you can put in, right? Like for me, for example, if I wanted to put in $10,000, and it doesn't matter if that goes to 0, right? Because if it goes to 0, whatever, it can make it back some other way, work an odd job, sell something, whatever, right? So let's just say, for example, my risk is $10,000. I put that into the market. Worst case is I can lose the $10,000. Best case is if it does get another crazy euphoria bull market mania and I 50x that 10K turns into $500,000, right? So the risk reward is incredible, and the best time to pay attention, in my opinion, is still now, when there's all this crazy FUD, all this fear, people thinking Bitcoin is dead because the SEC is suing everything and regulations and all this kind of stuff. That is the best times to get involved, not during when everything is pumping and already up 10, 20x, right? That is when most people get involved, during the peaks of the bull markets, and that's the wrong time. Now is the best time for risk reward, in my opinion. Okay, so what we have here is a 4-hour chart of Bitcoin, and quite simply, this is how I'm still seeing it right now. I did actually make a video a couple weeks back already that I thought we were going to see likely 23,000 before we hit 32,000, and so far that seems to still be on track. So you can see we're at 25,600, and Simply put, we are in a bearish short-term trends. We're making lower highs here all the time. Lower high, lower high, lower high, lower high, right? And we're making lower lows, lower low, lower low, lower low. So until we get a market structure break and until we get at least back above this high once again, ideally back above this high. So until we get back above 28,000, the trend in the short term here is down, and the likely target, in my opinion, is taking out this low. It has confluence with the fib golden pocket, potentially the 0.70% retracement around about 23,000. That also has confluence with a lot of moving averages, especially the 50-week moving average. So you can see here, when I turn it to a weekly chart, we add the 50 simple moving average here. Where does that line up? Perfectly with what I just showed you on the 4-hourly chart. So there is a lot of confluence around that area. And in principle, and basically this 50-week moving average is the line in the sand for the bear bull. Okay, so if we drop back below there, the bullish trend is probably invalidated and we probably retest the lows or lower. But until it is invalidated, basically we are still in a higher time frame bullish trend. We are above the 50-week moving average, and we are still here making a higher high, higher low, higher high. And if this were to bounce right here, it would be another higher low, which is basically the definition of a bullish trend. Okay, so this would be good, in my opinion, if we do test that, and that could be as low as 22,000, right? Maybe 23, but 22, it could still hit that, bounce off there, and then continue higher. And that has been my expectation now for June and July. We probably see a bunch of chop, probably hit that 23, 22,000. It could even wick below there, as long as we don't get a new weekly close below the 50-week moving average. And as long as that holds, then June and July, it's fine. Let it consolidate, let it correct, and then hopefully we get that upside continuation in July, just as we saw here in 2021. You can see May, June, July was down and consolidation, and then towards the end of July, we started a rally back up. So I do think that is a possibility that we see that repeat, and until we get a new weekly close below the 50-week moving average, that is the scenario that I'm leaning towards as being the most likely one that is going to play out. And let's take a look at the dollar index, because that is important for the overall bull bear direction for crypto and the stock markets. And as you can see, this is a weekly chart. We have the 50-week moving average here in blue, and you can simply see here, okay, when the dollar index is below the 50-week moving average and trending down, that is when we had both the 2017 and the 2020-2021 bull market. Okay, it is really that simple. When the dollar index was trending down here on the weekly chart below the 50, that is when we had the bull market in crypto. And when it was trending up, especially when it was above the 50, that was our entire bear market here in 2018, 2019, and the same thing over here in 2022. Okay, this entire move up in the dollar index coincided with the move down in the stock markets and in crypto. So we got below the 50-week moving average here basically at the beginning of 2023, and since then we have still remained below it. We got a retest here, but it got rejected, so this is a bearish retest and a good sign for the bears. Now we have had a bit of a bounce recently, but we are still below this 50-week moving average. So as long as that is the case, especially if we can start to continue the downtrend, then we could end up seeing a continued rally in the stock markets and potentially in crypto. And if this is going to continue lower, trending lower over the next 12 months, then we could really start to see potentially a new bull market in crypto that lines up with the halving cycle, which I explained earlier here. So there is a lot of potential confluence. So really, it's a situation of simply if then. If the price stays under the 50-week moving average, there is a chance for a bull market, continued upside in stocks and in crypto. So simply set an alert. If we reclaim this, if the dollar index gets a new weekly close above the 50-week moving average, it is probably time to be cautious for crypto, for the stock markets, because that means they probably go lower based on this inverse correlation that we've been seeing for the last several years. Okay, so if we do continue lower here, then I expect more upside in the stock markets. And we're going to go look at stock markets, and we've already looked at Bitcoin. So let's look at the stock markets, especially the S&P 500 and the Dow Jones Industrial Average, as they are two big indexes in the US stock markets. Now, the European stock markets, a lot of them have already made new all-time highs. The S&P 500 and the Dow Jones Industrial Average have not yet, but I do expect there is a decent chance that they will also make new all-time highs this year. So just to show you here, for example, this is the DAX, it's the German stock index, and you can see it basically made a new all-time high, marginally, but new all-time high over here, and it is still sitting right there. If we look at the FTSE, which is the UK stock market index, you can see it made a new all-time high over here, marginally, yes, and it's back below it, but still it made that new all-time high. So now let's head over to the S&P 500 and the Dow Jones Industrial Average and see how those charts look. Okay, so this is the S&P 500. You can see it's currently at 43.03, and then obviously the market is closed because I'm recording this on a Saturday. The all-time high was in January of 2022. As you can see, very simple. The 50-week moving average is a very good bear bull indicator. Once again, above it, we tend to make new all-time highs. That has been the tendency for, the last decade or so. So, 2022, we got below it. Things started looking bearish. We reclaimed it over here earlier this year in 2023, and so far we are well above it. And just based on the trend over the last decade, as long as we're above there, the chance is there that we can make a new all-time high. Now, one thing that we do have to be a little bit careful of is that we are approaching here the Fibonacci golden pocket retracement of this move. So if it was bearish, then this could be a rally over here. If it fails and it gets rejected somewhere between 4,300 and 4,400, it could continue down. Okay, that is something we have to watch out for. But at the same time, we are above the 50-week moving average. So if it does continue blasting past here, the next stop is very likely new all-time highs. We can also consider that it has broken this trend line to the downside over here, so it got through there. So basically, as long as the price now stays above 4,000, that's the line in the sand, above 4,000, we do have a real shot here for the S&P 500 to make new all-time highs this year potentially still. And as you can see, I showed you also the DAX and the FTSE in the European markets have already hit those previous all-time highs. So now is the American market, is that also going to follow suit? That is going to be the question. And I've explained this here on the channel before. Basically, if you look at the data, after a massive interest rate hike, you tend to not see a global market crash until 6 to 12 months after the first rate cut. We so far have not yet had a rate cut. We've had a massive hiking cycle over more than the past year. So for me, a warning signal will be as soon as we get the first rate cut officially, when the interest rate by the Federal Reserve gets lowered. After that, there is a window probably between 6 and 12 months where there is a high probability based on the previous times that this happened, based on the previous data, that we see a global market crash. So far we haven't had that yet, which means that we potentially still have at least 6 to 12 months of upside before a global market crash. Let's see how that ends up playing out. And then we have a similar situation on the Dow Jones Industrial Average. You can see I've written new all-time highs here all the time. After we got back above the 50-week moving average here from being below it, it ran up to a new all-time high. Broke below it, got back above here, new all-time high. Broke below it, got above here, new all-time high. Broke below it, got above it. And now the question is, do we see it one more time? Do we see a new all-time high? And you can see I've circled all of these highs over here, lower highs, because what we tend to see with this kind of setup is that we just see a massive squeeze. A lot of people are betting to the short side and it rolling over, but what we have here is all these short positions, and the market is pretty short from the data that I can see on they're bearish on the stock markets. So what better time for a massive squeeze to the upside? There's a recession, everyone's expecting everything to be bad, and maybe they're all betting on the short side. That's when we see the squeeze, right? We take out all these highs, go to new all-time highs, and then when everyone starts flipping bullish again, maybe the recession has passed, they make it official that there's no more recession, etc. Everyone gets bullish, everyone flips longs at new all-time highs, then we tend to see the crash. Okay, so keep that in mind. For now, you can see we're above the 50-week moving average. See how many times it's tested it. You can even say that potentially this is the inverse head and shoulders here, right? There's a little pattern here, shoulder, head, shoulder, and that should continue higher, right? So we will see if I'm right over the next 6 months or so. I do think there's a decent chance of new all-time highs, both in the S&P 500 and the Dow Jones Industrial Average. And if we see that, the dollar index going down, potentially continuing that downtrend, then we could see crypto, also Bitcoin, continuing higher, as I've shown you, potentially towards Q4, but probably towards the end of July, maybe August, starting a bit of a rally there too. And that is my expectation now for the charts. So this was a big summary of basically the whole market snapshot as I see them. If you enjoyed this, smash the like button, subscribe down below. And like I said, I believe still now the next 6 months or so are going to be the best time to dollar cost average for crypto and to position yourself to learn about it. So if you want my guidance, my insights, my training, everything I know about crypto and trading and investing, join my VIP membership. The link is in the description down below. 60-day money-back guarantee, so you can come try it out. If you don't like it, sure, you can get a full refund, but it is probably the best guidance that you can find anywhere for the price that I'm giving it. Continued updates, daily updates, the ability to interact with me personally, ask me questions, all of that is included. So click the link in the description down below if you want to become a VIP member. I highly recommend it.